Do you know today the market had its worst midday loss in the history of the NASDAQ? And this one thing you should do right now to make sure that you don't drop the bag and over time you take advantage of this historic loss. What's that one thing? We'll talk about it. Before we get started, as always though, like, share, subscribe to our channel as we continue to grow, giving great information like we are today. I am a certified financial planner, practicing for 17 years, a CFP for 11 years, but on these YouTube streets, just giving information. And the information that we got this morning was not good. In the words of Soldier Boy, hop up out the bed. Didn't turn my swag on though. Turned my, oh my gosh, what's going on as the market opened up down by 700 points. But today was historical. And we're going to look at this day 3-5 years from now saying, you know what? This was the day that I could make myself a lot of money. I can maybe possibly create generational wealth. And we're going to tell you what thing to do today to make sure going forward we take advantage of this historic day. Lego.
All right, U.S. markets still taking a hit this morning. The Dow fell over 1,100 points to start the day. Came back a bit. Now it's falling again. Semiconductor stocks like NVIDIA and Intel have dipped over 7% this morning. Overseas, Japan.
Crazy. He'll talk about that. Japan had its actual worst day ever in the stock market. Very bad day.
Market had it worse. It was one of its worst days in history, dropping over 12%. So let's continue to dig into the markets with CBS.
Think about that. 12%. A 12% decline means when it goes back up, that's 15%. People dream to make 15% a year. Now we see YouTube, like me, not like me, we see YouTube, see Instagram, thinking people making 15% a year, average. People making 15% a month. That's what it looks like. But the market only makes 11% a year historical the past 20 years. Since the market's existence is average 9%. So that means 15% is pretty good.
News contributor J.D. Durkin, he is back with me now to talk more about the sell-off. One of the things that is always interesting to note, J.D., as you know, is when retail investors, so not the big money, not the institutional investors, when they see
my profiteers, what we're seeing right now is called market manipulation. And that's why I wanted to show this, because they are going to put a sense that things may get worse before they get better. They're going to slowly but surely trickle in fear into this conversation. And that's why it's very important that we need to avoid the noise, because the noise is a distraction. If it's anytime it's a distraction, it gets us from our target. And our target is being profitable, making money as short-term investors and long-term investors. And the noise that they're going to give us right now is going to make us feel twice about investing when this is a perfect opportunity. Now, yes, the market may go down some more, but we are today, the market having its worst day intraday in the history of the market. This is not a time to buy? Please.
Market gyrations like this, they get very nervous, and oftentimes they call their advisors wondering what they should do. But
I had those calls. I'm a certified financial planner. Do got over 900 clients. We got calls today, but I wouldn't have it any other way though.
The reality is, when the market is like this, it is next to impossible to try and time what you should do. And so the smart money, the people like you, smart analysts, tell retail investors to do what?
Well, first of all, as we talked about at the top of the hour here, Vlad, don't panic, because that's what economic advisors have been telling me. And I think that's largely what hedge fund and portfolio managers will be saying to their clients. You know, even before this recent bout of selling, and we can't forget, this isn't just a Monday phenomenon. This really started on Thursday. And I think the average news consumer maybe started to pay a little bit more attention to it into the close on Friday. But
see the fear, right? Don't panic. But it's been getting worse. You see that? Very subtle.
Markets have been selling off and on over the course of the last few weeks in a very rotational way, meaning we've moved away from the big tech, the big splashy growth stocks, and we've moved into real estate stocks. We've moved into utility stocks. We've moved into small cap stocks that are not household names, but that rotation overall has been healthy. Obviously.
Now, I told you guys last month, the small cap growth, right? And we put clients into small cap. IWM If you're aggressive, URTY. Wouldn't recommend it, but URTY. And that has paid dividends until last week. And my baby, TMF, that I've talked about all this year, didn't do too good until about a month and a half ago. But TMF up over 35% while the market's been down almost 15.
This will underscore a lot of concerns, but the fact is, I just look back at where the S&P 500 was trading, Vlad, in June and July. We were firmly in overbought territory. We look at something called the RSI, the Relative Strength Index. That tells us that the money overall for the S&P 500 was a lot higher. The value of it was a lot higher versus.
Great point. And right now, the RSI at 32. Historically, when the RSI is in between 15 to 35, 12 months later, the market averages 20%. Historically. So, I mean, there's some deviations along the way. Not saying the market's going to be up this time next year by 20%, but if history proves itself, another reason why we should invest today.
This is where the market thinks it should have been trading. I think most people I talk with today say this was a bit overdue, and it's expected to be a bit choppier before things smooth out.
You see that? A bit choppier. Chop, chop, chop.
Yeah, and let's just talk about the risks that are out there, JD. We've got
Here we go.
Political risk. There's uncertainty about this presidential.
Here we go. I know they was going to give it to us.
Election here in the United States. We've got global security risks. We just did a report with our correspondent in Lebanon about fears of a wider war.
They're giving it to us. And look, the screen, right? Red. Anytime it's a green day, it's going to be a blurb. If it's a red day, a bigger blurb, a huge red day, they're talking all about it, y'all.
Between Israel and perhaps Iran and certainly Hezbollah in Lebanon. So there's fears over that. The Russia-Ukraine situation, that war has not gone away yet.
That war has been going on for 2 years. And since 2022, what has the market done? Markets went up by almost 50%. What are we talking about here? The fear, I told you guys, fear.
And then, of course, we've got the interest rate environment that we're looking at in the United States, where some are suggesting that the Fed did not move or has not moved fast enough with regards to its interest rate movements. Do you expect over the next couple of months that the Fed will have to accelerate or increase the basis points that
Spit it out, man. The Fed dropped the ball, though. We could all agree the Fed should have lowered rates in July. Actually, some people said they should have did it in April. And because they was late to the party, this what happens. Just like when it came to starting to raise rates, they should have started raising rates in 2020, not waiting until 2022 when inflation got out of control. I digress, though.
They increase interest rates by, lower rates by, or do we expect that they will continue at the same pace that they have over the last couple of months?
Now, he gave us a 30-second monologue about fear in a 3-second question. Now, I'm not even going to get to the answer. I just show you guys how much the news sparks fear. And fear is good for the big boys, the institutional investors, because they want us retail, everyday investors to be the dumb money. I'm going to show y'all an example. Now, we have the fear and greed index. Extreme fear right now, you guys. 1 week ago, we was neutral at 46%. So that shift and all the negativity when the market went down on Thursday and Friday over the weekend. It's a war coming. What's going to happen? World War III. And then today, we are extremely fearful. So what do we do as investors when we're fearful? We do the wrong thing. We think with our heart, not the chart. We think with our heart, not the mind, and we sell. So the market opened up down dramatically and we sold. And then out of nowhere, as the day went on, the market started to go up. Now, still down, right? Not down by 1,000 points, ended up being down by 700. That is a 30% swing from 1,000 points to 700. And us who sold after the market went down got caught holding the bag. And we're going to buy back. We hear better news maybe a couple days from now when it gets back to where it was before it went down. And from there, we're at a 12% loss. Some was at 100, at 88. We buy back at 100. Look at that, it's 12%. But this, my profiteers, is why we want to be smarter. We want to, over the long term, make great decisions. 3-5 years from now, we're going to be like, man, that was a buying opportunity that I did not take advantage of. Or I am so happy I bought companies that was down dramatically. My profiteers, extreme fear. When it's extreme fear, this is a buying signal. Now, yes, the market may continue to go down. I don't believe it's going to go down another 1,000 points, but we might have a couple bad days here or there. But 1 year, 2 years, 3-4 years from now, buying today, I believe we are going to have a lot more money. Well, 1 year, maybe more money. 2-3 years, a lot more money by buying things at a discount today compared to trying to time the market. Might go down more and you might be able to time it more. But us buying the market lows when literally the market NASDAQ intraday had its worst day in its history, what better day to buy than that over time? Extreme fear. 1 year ago, it was greed. Now, we didn't want to sell 1 year ago because the market went up after that, but you can see this huge shift. 1 week, we was neutral. We was like, the market's okay. 1 week. But literally in 7 days, because of fear, the news, fear, uncertainty, we are now extremely fearful and people are selling like wildfires. So we're going to go over which investments, in my opinion, you want to look at. You might want to have that shopping list ready. Apple. Yes, Apple, right? Oh, Apple, right? Look at this drop, though. Apple, where it was literally a week ago, down by almost 20%. Today, it's down by 5. It opened up down 8. Are you telling me us buying Apple at a 17% discount is not good right now? It's down 17. If it gets back to where it was, that's a 25% gain, 22%, excuse me. $100,000, now $122,000. Warren Buffett sold this back in May, June, and July. After he sold it, it still went up another 30%. Warren Buffett sold literally 10% in totality, and it still went up by 30%. Apple, huge buying opportunity. Will it go down a little bit more? Maybe, maybe not. But again, you're able to say that you bought it on the NASDAQ's intraday worst day it ever had, buying that at a 17% discount. Come on, y'all. TSM, look at this, right? So for people that thought that they missed out on the video, they missed out on the video. TSM, something that we should look at. Down 30% from its high. 30%, y'all. 30%. Today, only down 2%. Market had a horrible day, but today you're telling me only down by 2%? Come on. And looky here, looky here. Oh, look at that candle. Good googly moogly, but only down by 2% today. But as I said, as we can see, down 30%. TSM gets back to where it was. Let's say if it takes a year, do y'all think it's going to be a year? If it takes a year, that is a 40% gain. Down 30, we buy it today, up 40. A year from now, are we mad that we made 40% on TSM? Of course not. Another one. And these are all investments that we believe that are not that bad, not that risky. Microsoft, right? Microsoft from its high, again, down 17%. Today, down 3.5%. It was down as much as 7%. You bought it at the low at 7%, 3.5%. Wow, right? But 17%, it means it's 22%. Am I able to buy Microsoft at a 17% discount? If you guys just think of where it was all through the year, from January to 2 weeks ago, I said, hey, you're going to be able to buy Microsoft at a 17% discount. You're going to jump through the moon and say, you know what? I'll take you up on that. One more. Amazon. And Amazon, it gapped down dramatically, down by 4%, but it was down as much as 6.5%. And Amazon, it's gapping down, right? Down by 25% since its high. That means if it goes back up, it's going to be up by 35%. If it's a recession, I believe that Amazon is recession proof. They do everything but give you fast food. You can either get your food from Amazon, right? They have Whole Foods. They have all the other things they have as well. You can actually start your business on Amazon. Amazon, in my opinion, is recession proof, and Amazon did this before, right? Look what happened to Amazon back in 2022. Top to bottom, Amazon went down by 42%. Literally a year and a half later, it went from being down by 42%, my profiteers, to now I'm all over the place. All over the place. This is real time, you guys. Real time. But from there and where we are today, 103%. In less than 2 years, a year and a half to be exact, you made 102%. 102% on Amazon. It was up 130%. So you telling me now, if you had your crystal ball and you bought this low where it is now, and it gets you not even 103%, but 50% in a year and a half, you're going to be upset? No, my profiteers, not at all. So yes, today, horrible day for the market. Market very bad. But don't tell me that 2 weeks ago, if you was able to buy those large cap stocks at 15, 20, 25, 30% discounts, you wouldn't have jumped in the moon. January 1st to last month, you was ecstatic about the growth. And this happens. Corrections happen. 94% of the time, you're going to have a 10% correction. Excuse me. My bad. 94% of the time, you have a 5% correction. 64% of the time, that means 6 out of every 10 years, you're going to have a 10% correction. So this is not crazy, nothing abnormal, but what are you going to do to take advantage of it? But comment below. Am I crazy? The market's going to go down more? Going to go up? Let me know. I know one thing. This is great information. You guys join my Patreon. Patreon's popping. We have our weekly newsletter where we give information, detailed information from a planning standpoint and investing. I am a certified financial planner. Also more great information like this and what we're doing and some actual investments from a price target that we believe is going to outperform the market. But love is love. Let me know what you guys think in those comments. And as always, let's make some painful profits together, y'all. Peace.
Making no money mistakes, make a payment on your bills and you still late, yeah. Pay for profits to help you seek change, and you just wanna get paid, yeah. Tired of making no money mistakes, make a payment on your bills and you still late, pay for profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Been check to check, you knowing it could be different, you knowing.